Mike Langford. Welcome to another episode of the Modern Financial Advisor podcast. This week on the show, Kyle Zasky, CEO of VRGL Wealth, is with me for a conversation that builds on some of the other conversations we've been having recently on the show about the gaps in client acquisition for financial advisors. Now, one of the things that really jumped out to me is Kyle's passionate belief in the human element of financial advice and what it means for clients of every economic station. I tell you what, I'm with Kyle 1000% on this. We are on the cusp of something really special if advisors are ready for the mission. So lock in. You're going to love this episode. Now, before we get to the conversation with Kyle, please do make sure you take a moment to subscribe to the Modern Financial Advisor podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, hit me up. I'm basically at Mike Langford everywhere on the internet, or you can shoot us an email, podcast@finservmarketing.com. Okay, let's jump to the conversation with Kyle Zasky. Well, Kyle Zasky, so wonderful to see you. Welcome to the Modern Financial Advisor podcast.
Good morning, Mike. I don't know where you are. I'm in New York, so maybe good afternoon to you.
I'm in Austin, Texas, so it technically, literally, as you said, that just became afternoon. So we're good. We're on the same wavelength. You know, we've had our breakfast. We've both mentioned that we showered today during the breakfast.
I thought that wasn't supposed to be on camera and audio. Yes, for all the listeners out there, we're both clean. We smell nice. You could just eyeball us and see if we're passing the test.
Yeah, we were both joking about the notion of like when you were working at home or from home, however you choose to phrase it. It's really funny how easy it can be to get into your work day and be doing all this stuff and realize, I haven't showered yet. I got to catch a shower before I do this thing or whatever. Now, for me, I don't have your gorgeous locks of hair. I'm a bald guy. So for me, it's really easy. Like if I don't shower, nobody knows. So I just kind of like, there's no grime on my face. Nobody, but some people who have like hair like yours, which is amazing, by the way. If you're not watching the video, you should check out Kyle's hair. It's awesome.
Mike, I'm sorry that you're in your situation. I know all my friends are jealous of me. I'm 54 years old. They've been harassing me for the last 10 years, but I'm just leaning into my good fortune. So I'll take the compliment.
I tell you what, if I'm actually as a proud bald man, I'm always a little annoyed at guys who like just won't accept reality. Just like, dude, just take it down, shave it down. I'll tell you what, it's the most liberating. If you are follically challenged, as I am genetically, you can just, take it down and, man, showers are easier. Everything's the styling. You don't have to worry about anything. You don't have to worry about like hat head or wind messing your hair up. You're good to go. So,
well, I thought this podcast was about financial advice and RIAs and technology, but we could talk about physical fitness, how good I look on camera. I mean, I'm game for anything.
There you go. Exactly. Well, and now people know. They feel like they know you a little bit more. So let's go ahead and dive into the FinTech and financial advisory use cases of it all. So one of the things that's really exciting for me in talking to you, not only the fact that the handsome hairline, so you got that going for you, is that you're a brand new CEO of VRGL, right? So it's not like you're the founder and has been with this company for 20 years and all this type of stuff. You're really new on the job. And that's a novelty for me. It's rare. I don't usually see, guys who have been on the job for like 2 months or whatever. So one of the things I thought would be fun to chat about with you, since you're brand new to it, is what surprised you so far, right? Because like this, you're at a company. This isn't like I know myself. Like I have worked for other companies, and you have the picture of what the company's like before you take the job, but then you get the job, and you're like, oh, here's some surprising things. Sometimes bad, sometimes great type of stuff. So talk to me about what's surprised you so far. What have you learned since joining the company 2 months ago?
Look, you can't know everything when you're taking a new job. My role or any other role at an organization during an interview process, I try to upfront, and this is general advice for anybody thinking about a career switch or a job switch. You try to do as much reverse due diligence as possible before you take the position. And, I'm a very transparent guy. And one of the reasons why I took this job, and we could talk about the product probably later in the conversation, is I felt like the stakeholders, the board, the executives that I spoke to, everyone was very authentic. And I think I'm pretty good at extracting, the truth, the good, the bad, the ugly. So I didn't step into a situation and suddenly, oh my God, I'm blindsided here. I thought this was completely something different than I expected. So I did do a lot of diligence at the top of the funnel, if you will. But, your point about being a CEO for hire, and I've given this a lot of thought, and just maybe for your audience's benefit and yours, I was originally a founder myself. So I come to the table with, I had founded, scaled a very successful business for about 12 years called Edge Trade. That was Kyle 1.0, the first part of my career. And when it's your baby from beginning to end, there's often a different level of passion that people have as an entrepreneur versus a CEO for hire. And I've seen data or analysis where there's, as a company scales, is the founder necessarily the right person to take the business from where they got it off the ground to the next level? And often there is management shift and executive leadership change as a company evolves. And so there's a time and a place for founder-led organizations, and there's a time and a place for CEOs for hire, and there are merits to both. I find that in general, if a founder is competent and they can take the organization to the next level, I think that probably if I had to pick one or the other and I was an investor, I would prefer to have the founder-backed DNA of the organization. But often, particularly with technology companies or early stage companies, founders have a lot of blind spots. It's their baby. It's like their own children. And sometimes they can't see things objectively. They think they've come up with a fantastic pain point that they're solving or a business model that should make sense. Like, if I build this, everyone's going to love it. And it sounds great and they're passionate about it. But sometimes as the founder, you lose that perspective to have a realistic view on actually what it takes to not just have an idea, but how do you execute on a business plan that creates some sort of sustainable franchise, which is the reason why you started the business to begin with. So in my case, being a CEO for hire, I was originally a founder, so I bring that to the table here. And this is my second CEO for hire position. Most previously, I was the CEO of a company called Layer One Financial, which was an institutional platform, scaled that, and just recently sold that to JP Morgan. So, I'm trying to bring everything that I've had in my career prior to VRGL to bear here, being both a founder and a CEO for hire. And now this is my second shot at CEO for hire. And, I want to make magic happen again.
I love it. I'm glad I get to be one of the first people to interview you while you're on the job here.
I didn't mean to interrupt you. So yeah, definitely. This is my not only the first chance interview, but my first podcast ever.
Yeah.
So I've done a lot of, my career, different media. I was been on CNBC, thankfully, a couple of times, and news articles and journalists and panels and speaking engagements, but I've never, ever been on a podcast. So I'm really excited about this.
That is the headphones,
reason. The microphone that was sent to me. This is great.
Yeah, I tell you what, that is the reason why you were caught a little off guard by, the talk about the awesome hairline and stuff like that. They don't do that on CNBC. They don't go like,
I didn't even want to use the earphones. The earphones. I was like, this is gonna ruin my whole hair. Mess up
I do, right? Yeah. Exactly. Hey, I tell you what, welcome to the podcast. For anyone who's never been on a podcast, and for you too, one of the values of this is the long form conversation allows us to go in a variety of different ways, right? And allows the viewer in this case, which is and listener, financial advisors and executives at wealth management firms who might be users of VRGL to get to know you a little deeper, right? To kind of explore things in a little deeper way, and so I love it. And they also get to just feel a little more comfortable with you. We always say that people do business with those they know, like, and trust. And I always layer in their familiarity as well. I got to be familiar with you and then know that you're competent. So here we go. We're diving into it. This is awesome.
Great.
Yeah. So while we're still on the new to CEO world for VRGL, a question that I had is, okay, so you come into a company's established. It is still a relatively new company, but it's established. What are some of the things you do right out of the gate to make sure you get your arms wrapped around the company itself, but also the solution it's providing to advisors, right, and wealth management firms? Like, what do you do? Like, how does that look, right? How do you do it first? What's the first things you're looking at?
So it's actually it seems intuitive. I think that the people at the firm think that this comes easily to me, but actually it's very methodical, and it starts with actually the people and the stakeholders involved. So when I think about the stakeholders of any organization, it's a combination of the investors, the board, the clients, and the employee and colleagues that you're going to be working with. And what I set to do day one is sort of establish a great deal of rapport and trust with the team. Whenever you have a new guy come into town, there might be that risk for organ rejection. Is my style different than my predecessor? Can we trust this guy? Who's this guy from New York? I don't care if he built businesses. I mean, I love his hair, but can he manage a business? It's establishing that foundation with the people is actually critical, because beyond what you're doing product wise or what your business model is, it's the team that's going to make it happen over time. And who VRGL is today is not necessarily who VRGL is going to be tomorrow. But the team that we have and the culture that we cultivate is kind of what allows any business to evolve and be agile and face the challenges that are ahead. So team building, collaboration, transparency, trust, rapport with all the stakeholders was really top of mind before I got into like the nitty gritty or, looking at our margins or financials or pricing model or market positioning and all the standard blocking and tackling things that a good executive should do. So I think 6 weeks in, I think I've really nailed that part of the equation quite well with the team. And, we don't have my colleagues here to say Kyle's full of crap. I can't stand the guy, but I really made an effort to get that out of the gate off the top, and I did it pretty well.
Oh, so the organ has not been rejected. I love that. I've never heard anybody use that phrase before to describe like what happens when a little bit of culture clash when a new person comes into an organization. Right. But it's a great way of thinking about it, right? Because we've all experienced that of like, hey, here comes new guy, new gal, whatever you want to call it, who's a boss of something. And you just notice just everybody feels different suddenly. And it either means that person's not going to last very long, or the rest of the team is going to start off because they don't really vibe with it. So I love the way you described that. And I think you're spot on. I mean, you know more than me, but like getting in there and getting to know the people who are doing the things, right? Making sure you understand the culture, making sure you know kind of what makes the engine run a little bit there before diving into, all the other details of, like you said, margins and the intricacies of how the tech works and all that type of stuff is really smart, because it's the organization that's going to make any changes going forward that you see.
Yep. And then probably after that is probably the most important thing is understanding our product market fit currently in the business. What is it that the business, what value proposition are we currently delivering, and to who? And is that the right audience? And is it the right product set? Yeah. And then you start expanding the aperture to determine, okay, if we're going to move forward, it's not just idea generation. Wouldn't it be nice if we could also do X, Y, and Z? And this is where companies also get themselves into trouble, because you can imagine a value proposition that your competitors are doing or a pain point, but you need to know yourself organizationally. What are you capable of delivering? And just because, on a blackboard, we can conceive of great things to build doesn't mean that VRGL is the right company to deliver those services, build them and deliver them. So, it's a combination of people, product market fit, the target audiences. Are we accurate about their pain points? What does the future look like versus today? Yeah. You kind of have to operate, particularly at the early stage. It could be very frenetic, and young companies are always about, we just need to acquire new business and new revenue. And they're not really thinking about what happens in a year or 2 years, or, what is your brand really supposed to represent for the long term? And these are complicated things to answer. And even if you can't answer them, the challenge is, how do you execute upon that and build the right team and mentality around delivering something special in the future?
Love it. I love it. No, it's a really smart way of looking at it, because I think too often people come in and they try to jerk the boat to one side or the whatever. It's going to make some changes too quickly. And you mentioned the temptation to boil the ocean of add every service we can or expand as sometimes just being laser focused really helps. So let's dive in on that a little bit. So during our prep call, you mentioned that advisors tend to have their hands full with existing clients, and that often leaves little room for focusing on client acquisition. So there's a need for tools that engage prospects before they convert to paying customers. And VRGL addresses this challenge by equipping advisors with tools to create personalized white label proposals that build trust and demonstrate competence. And I love that conversation because it is true. It's like, as somebody who's been on that side of the world, right, talking to prospects, there is a bit of a gap. Like, okay, I met you, Kyle, you seem great. You probably would be a good client for me and so forth. There's a now what phase between you like me, I like you, and then when you convert, right? So let's pull the cover off. What are the gaps in client acquisition for most advisors today? And what tools does VRGL provide to help fill those gaps?
Yeah, sure. And before I answer that specific question, just in terms of the comment in our prep session about not too much time for sales acquisition, always focusing on customers. I think that most financial advisors, unless you've been doing it for 30 years and you already have your book of business, and really new customer acquisition is not top of mind for you. Maybe you just want to manage your accounts and go off into the sunset and retire at some point soon. I think probably, I'm pulling this number out of my ass, 90% of the financial advisors are always happy and looking for new customer acquisition. So it's a universal challenge and a universal pain point wherever you are in your career. And to do that effectively, I know that a lot of advisors win business by referrals. A lot of advisors try different marketing schemas. They try to build their brand in different ways. Ultimately, and particularly in this new AI world, which I'm sure we'll talk about a little bit here, building trust and rapport with prospects, if you're a financial advisor, I think is probably one of the most important characteristics if somebody's going to hand over their portfolio for you to manage. This is not like, you're going to buy a t-shirt or not, maybe a pair of sneakers for $100 online somewhere. And if you're a consumer and you do some browsing, you click and you buy it and you make a mistake, it's not the end of the world here. But choosing somebody to manage your $5 million portfolio is a significant decision. And if we're talking about financial advisors versus the do-it-yourself crowd, where you're a younger millennial or Gen Z, where you open a brokerage account or a Robinhood account, you're looking for that human overlay of and characteristics that only a human can bring to the table. And I would not want to work with you as my financial advisor if we didn't have a certain rapport and trust with each other. Yeah. And if you just meet for the first time, I think it's unlikely that within one meeting, you're just going to suddenly say, this is the right person to manage my family's net worth and life, not just mine, but my children's and maybe generational things and some of the most important decisions that a prospect is thinking about or concerned about. So that process of building rapport and converting somebody from what starts as a lead, maybe lead, and maybe you can get that person to have a phone conversation with you. And then the next step is maybe, how do I get an in-person meeting? Where VRGL sits in, and this is kind of important in that, think about it, the sales funnel for the registered investment advisor is, what brand am I bringing to the table, or what philosophy am I bringing to the table that might resonate with that particular prospect, that I'm the right person for such an important responsibility. And what VRGL does, which is very, very important, it's narrow, but it's very, very important, is we're in the business of arming that advisor with data and analytics about the prospect so that when he sits across the table in his office or for coffee, the advisor can highlight a couple of key characteristics of how that advisor may differentiate from where that prospect currently has his capital, whether it's a different financial advisor or no advisor at all. So what we do is, we help the advisor very, very quickly, in a matter of seconds or minutes, ingest all that customer's portfolio information. It could be hundreds of brokerage statements. It could be unstructured data. It's an enormous amount of data that is beyond what a human can do efficiently. And in a matter of moments, we can serve up data and analytics for that financial advisor that makes him come to the table and say, hey, look, Mike, I looked at your portfolio and it looks like your performance is X. I've identified a couple of funds you're in that the expense ratios are way too high. You may not realize this. I know that you love Apple stock. You own that individually, but 3 of your funds also have Apple in your portfolio. You're concentrated in this area. ideas that can contrast that you've taken the time to look at this prospect as an individual and have personalized advice. Whether you use all the detail or not in the analysis we provide is almost irrelevant. You can find one important nugget, and that little nugget can help you establish that rapport with that prospect in their journey to becoming a client. So, when you think about what it takes to acquire new business, we're in the business of arming financial advisors and wealth managers with tools and analytics to help them actually do their job better and find nuances in a customer's portfolio and have them stand out about how they could do a better job and be helpful.
What I love about the approach you just described, not only does it arm the advisor to feel more confident that like, hey, and that, hey, look, I really already know this client, this prospect, and I know that we can help them because I've identified, key areas of differentiation, as you mentioned, or service that needs to be rendered, right? Let's call it that. The other thing that it does is it demonstrates value to the prospect immediately, right? Before we've even signed a contract of me becoming your financial advisor, I've already got value from you. You've told me about things like overconcentration risk, right? Or paying too many fees on certain things or whatever. You've given me a picture of things that could be challenging for me. And then hopefully maybe some positives, right? Like, hey, if we keep on this track, we can accomplish these types of things or whatever. But you've done some things for me. That's amazing, right? So not every business is like that. And I think historically, not every financial advisor is like that. You come in, they'll talk to you about, hey, here's why we're awesome.
That's correct. I mean, people sometimes have too much of a transactional nature of relationship building. And it's not just about, hey, give me your money. I can create more alpha for you. I mean, or sell you certain products. And part of like our pillars, when I think about how we position our organization, there's sort of the intake part of the equation is, the data extraction to actually have all the information to do this kind of thing. But the second step is what we call educate. We're educating the advisor with insights from that information so that they can go on and move to a sound proposal that is grounded in something. And, one way I just thought of this metaphor leading up to this conversation, and maybe you're going to be my test case to see if this makes sense and we can use it throughout the organization. But think about physicians as an example. You go to the doctor and there's, blood tests or different biomarkers or things that they might analyze about your physical and mental health that they're measuring through data, like your lipids or your cholesterol, or maybe whether you have diabetes or something else. But there's also the clinical part of the examination, which is really just getting to know your patient. And in the clinical part, you start to discover the human element of this. Maybe on that intake form, when you go to your doctor's office and they ask you, how many drinks do you have a week? People might be ashamed to really disclose, hey, I drink 6 drinks a day. And they'll say, oh, I'm a social drinker. And the doctor might look at that data and the data is just like, the biomarkers, if you will. Mm-hmm. But if the doctor's concerned about some sort of liver disease, his job in developing that report is to make you, let's say I'm the doctor, you're the patient, Mike, is like, Mike, listen, I'm here to help you. Try to find the right nuance and cadence and rapport building so that you're comfortable telling me what's going on with you that might not be indicated in a blood test or what you filled out on an intake form or what I see on an x-ray. And, so I think financial advisors in many ways are like health professionals. And people, this is sort of a pitch for the industry, if you will. What does it cost to have health insurance for your full family? It could be $20,000, $30,000, $40,000 a year. Healthcare costs are outrageous, but we all think it's worth it to spend the money on our physical well-being. Now, your financial picture overlays with that in a Venn diagram. How you're managing and planning your financial future for yourself, for your children, is just as important, maybe not just as important, but important enough that, it really shouldn't just be like, hey, I've heard of diversification. Let me just buy a couple of ETFs. I'll open a Robinhood account. Think, what the hell do I need some guy talking to me every month about my portfolio? It's almost like you need a sounding board, a human therapist, if you will, that's watching out for you and your portfolio, that comes to the table with experience. And so stepping it back again with VRGL, we can't empower that financial advisor in every shape, form, or method that they need to do their job correctly. But that's kind of like philosophically what I want to see out of Virgil Wealth is let us help the financial advisor any way we can within lanes that make sense for us to deliver. And then other lanes that are delivered by other vendors, let them do a great job.
Yeah.
But we want to have your back, basically.
I love it. It was so interesting. You hit on something with the going to the doctor analogy that I've talked about before in different contexts, but I think we as an industry don't think about it as much as we should, is that most of the people that are sitting across the table or across the Zoom from a financial advisor are incredibly uncomfortable talking about money. Right? We live in a society where you're not supposed to talk about how much you make, how much you have, all that type of stuff. It's kind of, not a cool thing. And then we also live in a society where a lot of people will feel some sense of shame if they don't feel like they have enough. Right. So that I haven't accumulated a big enough nest egg. I don't feel as financially secure as I should. So now I'm going to sit across the table from somebody who might confirm I'm not doing as good as I should be doing, whatever. So it's kind of like the drinks, how many drinks do you drink or whatever. Like if you're not doing the things you're supposed to do health-wise, I might feel uncomfortable. But then on the other end of the spectrum, we also live in a society where people are told, like, if you're rich, you might be a bad guy, right? You might be rich and somebody else is poor, and you should feel bad because you should feel like you're the reason why they're poor. There's a lot of like guilt that comes along with money. So people aren't super comfortable going full open kimono, as they say, with they just like show me all your financial stuff, right? So the fact that
so much in what you're saying, there is so much for not just for the prospect, for financial advisors or people also. I mean, I have to ask myself, if you're in the business of being a high net worth financial advisor, you're talking with people that might have an extraordinary amount of money all the time, coming into your office. Oh, I just had my 14-day cruise in Mediterranean in my boat. It's like you're sitting there. It's like, I thought I was doing pretty well, but all my customers are just like, I'm glad you got front row seats at, Taylor Swift concert for all your grandchildren and spend $17,000 on it. It's like, money, shame, jealousy, psychology, all come into play for the prospect and the financial advisor.
Yeah.
And this is where, if you really want to do your job correctly, you have to find, you're the professional. Your prospect is not necessarily the professional. It's your job to help guide them, to extract them closer to the truth so that you can have the right information to do your job. Back to that doctor analogy. It's like eventually the doctor wants to get to the bottom of what's causing this guy's liver problems.
Yeah.
And he needs to find the right way. And maybe it's the heart. Maybe some advisors, depending on the prospect, you have to face off. Maybe some people just need the hard truth. It's like, look, sir, or Jack, look, I'm concerned about your liver. You really just, tell me straight, how much alcohol do you consume? And you might have to be very confrontational, but other times it's more extraction over a series of dialogues and getting to know someone until they get comfortable. It's like, you know what? Yeah, you're right. And the shame might be not that I don't have enough money in your example, but I think people are ashamed of the mistakes they might have made historically. Sure. I come to the table here and gosh, I'm going to see my financial advisor. I feel like such a douchebag. I've been in fixed income my whole life. I was just always so afraid. I missed like 30 years of what seems like up and to the right financial performance. I feel like just a loser. All my friends are supposedly making money, or, oh, look, they bought Bitcoin. Look how much money they made in Bitcoin or real estate, or all that chasing, and I think that a mature financial advisor thinks about the psychology of it, psychology of themselves and the psychology of their prospects and the psychology of their clients, and has to bring that human element like a therapist to bear to be productive for the prospect and productive for themselves if they're going to win that business, on how to face off with them over decades, if you will. So, the human element, it's nuanced, and it's a very difficult skill to cultivate. I know there's 250 or 300,000 advisors out there. We're in the tech side of the business, and eventually everyone can be armed with the right technology, but that human element requires training as a practitioner. And we're not getting into the therapy business, like helping financial advisors be trained for that, but it wouldn't be off target philosophically from my mission statement. How do I help advisors? Yeah, if I could make them better communicators or salespeople, that's just kind of part of it.
Or it's funny, back when I was my early days as a financial advisor, I had somebody say to me, Mike, you've got a great bedside manner. And it was like the highest form of compliment, right? That I could legitimately make them feel comfortable. I could break what seemed to be complex things down to a way that the average human can understand and so forth, and just have a tremendous amount of empathy. And so I feel like, some advisors probably could use a little bit of training in those types of things. But, on the flip side, and you touched on this a bit, advisors could use a little psychological help as well, if you want to call it that, because, right now it's no secret that organic growth for financial advisors is kind of anemic, right? It's less than robust, as one would say. I've seen numbers that say it's around 3%. Other stats that say 75% of all growth for financial advisors over the last 10, 15 years has been market driven, not bringing in new clients. And then even worse, the stat that I saw from like Price Metrics by McKinsey, 40% of advisors are experiencing net negative growth, meaning like assets are shrinking, they're going out the door. And that kind of makes sense with the bell curve, the age of advisors, right? Your average client is around somewhere, draw a 5-year circle around your age. That's probably what your average client age is. So if you get to be an older advisor, some of them are going to be in the asset consumption phase of their experience. And the average age of an advisor now is 60, right? So that means that half of them are over 60. So one of the things I wonder if you're thinking about, and I know it's still early at VRGL, but is the psychology that advisors do. Like, how do we empower them, build them up so they feel more confident in going out and getting organic growth? Because one of the things that I've heard from practice management professionals at like large broker deals and so forth is they'll say a lot of advisors get to a plateau and they get a little comfortable. And it's easy to get comfortable when you're making $400,000 a year or whatever every year, no matter what happens. And you might even make $450 next year if the market goes up and you didn't bring on any new clients, right? So it's real easy. But as an industry, you have to find a way to help. You get where I'm going with this? Like, I wonder if there's a psychological barrier there.
There's a lot to unpack with what you just said. So maybe we can parse it into a couple of categories. I've heard some of those statistics myself too. And some of it seemed a little contradictory to me. And I have some theses brewing in my head. One, I did hear that there's going to be a massive shortage of financial advisors in the near future because I guess a lot of advisors are hitting retirement age and we've got a larger population of millennials coming up that might need advice. And I keep hearing there's going to be a shortage. That doesn't kind of line up mathematically. If there's such a shortage of financial advisors coming down the pike, why would organic growth be so difficult? If that would mean that there's a lot more business out there to be won by the financial advisors that are still around. And one thesis that I have is if the organic growth is slowing down, I think it's probably a combination of factors. One of them being, are we speaking to the younger demographics well enough to justify or explain to them the value proposition of getting some human financial advisor advice? And the answer to that could be yes. I think it should be yes. And this is where the coaching of financial advisors, they shouldn't be down on the organic growth statistics. I think that the younger audiences will be receptive to this. The value proposition is there. But one thing that I'm hoping there's a way to solve for the financial advisor community is there a way to move a little bit further downstream so you can deliver your products and value proposition to a much larger audience and not all be focused on the mass affluent or the high net worth market? I mean, we all can't be high net worth advisors. There's just not that many people out there. And if you're lucky enough to have 20 super rich families, maybe you don't really need to acquire another a customer for the rest of your life. But is there a way to actually provide, a good chunk of what you do for somebody who's got $8 million to somebody who's got $400,000? Yeah. And then go even further down there. There's a lot of do-it-yourself technologies out there, for as little as, people with a few $1,000s with AI. I think a lot of the, insights that you can get technically for some of those younger audiences in particular, portfolio allocation, diversification analysis, some tax analysis. There's a way to help a broader set of people than what the financial services community is currently catering to. And I think it's the sticking point has to do with the sort of the net worth levels that people are focused on. So you said a lot of things, and I remember I was going to parse it, but
all of what you're describing it's 100% true, and I love the way you're describing it. So like we could talk about a little bit, like there does seem to be a conflict or whatever you want to call it, a paradox here. Like, okay, so you're telling me that there's fewer financial advisors, or the population is shrinking, if you will, and we're seeing less young people coming into the industry, so we're not backfilling the way that we used to. It should seem like it's easier for existing advisors.
It should be an opportunity to lean into, not something to be afraid of.
Well, and that's kind of where I'm coming at. It should be. But I think what happens with many advisors is they, at a certain point in time, they as the practice management professionals will talk about, is like they get a little comfortable. Yeah, and it's really easy to do so. If you're making, whatever, $400,000 or $500,000 a year, and you're playing lots of golf and working less than 40 hours a week for most of them, real easy to not go, like, new clients.
Not everybody's got a growth mindset. I mean, you're in business for yourself. Even if you're under some sort of larger umbrella, you as a financial advisor, it's your business. You are a mini entrepreneur, and not every entrepreneur wants to take over the world, and neither should you have to. But the reality is, if you want to just think objectively about your future, is yes, some key clients that drive a lot of your revenue might go away. That's right. You might not get their children to be a client of yours. They might switch. The next thing you know, you're comfortable $400,000, turn it to 275, and then you get a 20% market correction. And then that 275 turns to 225. And then you're in a panic mode because you haven't done anything to grow your book in the last 5 years.
That's right.
I think a bigger stress point, aside from not having that growth mentality, and I've been at even in my 6 weeks, a couple of conferences already. I think that some of the concerns, anxiety-wise, from financial advisors who are actually thinking about building their books, is a lot of fear and missing out and concerns about AI, and how if I'm not using AI, I am a failure. And all my peers are using all these great new tools. I'm going to be left behind. And this is kind of where I want to bring it down tangible for people. Yeah. If you're a financial advisor, and even for people who are technologists, one part of my career I didn't mention, like in between the company that I founded and the company that I was CEO for hire before VRGL, I was a FinTech banker and venture capitalist following the wealth tech sector. And even as a professional, seeing all the innovative young entrepreneurial ideas that are coming through, it is an enormous amount of things happening so quickly that even the experts can't keep track of the pace of acceleration and change of these tools and services. So how, if a professional who's focusing on this on a daily basis can hardly keep track of the pace here, our reptilian brains cannot handle the acceleration that's going on for humanity. I'm very, very concerned. I don't want to freak people out, man. Like I'm a little bit bearish of socioeconomic stuff coming up over the next couple of decades in the transition year. But back on point over here is, it's creating a lot of unnecessary anxiety, where I don't think financial advisors need to actually figure this out for themselves. This is where the vendor community comes in. This is where VRGL comes in, and all of the peer vendors that are there to support financial advisors. Let us be the ones to distill all these efficiency tools that AI can bring to the table. We will put them together in products and services that we can serve up to you as the financial advisor, hopefully at an affordable price point, and then make that user experience for the financial advisor almost like Apple. Intuitive and delightful, where I don't really need to understand how this fancy AI works to give me this white label proposal that VRGL spun out for me in a matter of minutes. All I need to know is that I love the output over here, and VRGL's made the sequencing very, very easy for me to get to that end output. I don't need to know how the sausage is made. And because things are evolving so fast, and there's hundreds of vendors talking in everybody's ear, it's the vendor community that's going to live up to the table and empower the financial advisors so they're very, very relevant for decades to come. Because I believe, again, bringing this full circle, it's the humanity part of the equation that is probably most important to be a wealth manager and a financial advisor, versus tools that help you set up a model portfolio. That has to be driven by technology and automation and other things that can help maybe rebalance efficiently or figure out your decumulation when you get into retirement. But the humanity sitting across from Jack, who just lost his spouse, or his child who he wrote out of the will 5 years ago, and he's feeling ambivalence about bringing them back in, or how to plan for a business sale or transition, or what do I do about my grandchildren? Yeah, a computer can spit out standard advice in those scenarios, but it really is the therapist part of the psychological conversation that people need. Because money, like you said, also is not something people like to talk about. So you might not want to even talk to your best friend about that. And you might not want to talk to your spouse about that first, or your children about it. It's difficult. But your financial advisor, they are your therapist.
Yeah.
In fact, financial advisors, here's a little clever thought. Have a couch. Let your guys sit sideways and tell you about his mother. I mean, I'm joking over here, but that's where the discovery of the unique value proposition that you can bring to a relationship creates a certain bond that you can give guided advice or comfort or empathy to someone that creates that lasting relationship that you might can trust me, Kyle, that I've got your back. Here's what I'm going to do. This is what I need from you. I'm the guy that's going to tell you what I think is you're doing wrong. I also don't have a crystal ball about markets. I can't guarantee you certain returns, but I bring experience and wisdom to the table and tools to help you navigate what you might not be able to see around the corner. And that is difficult for AI or computers to do in replacement of humans going forward. So you should be bullish as a financial advisor. In fact, I mean, I've had a great career, so I wouldn't want to go back in time and become a financial advisor, but I've been thinking about this now in my new seat. It's like, gosh, I think there's a huge opportunity. If I was 25 years old, you know what I would do? And I had patience. I'd say, look, none of my peers or people 10 years older than me around it, that they generally have not made a terrific amount of money. Maybe some of them are not employed yet. But if I can cultivate a small group of people that are employed that maybe have professional degrees that they're going to be future high net worth earners, is have patience and cultivate those relationships that might not be profitable for me. And those people will be the foundation of my book in 10 years. That's right. And nobody's talking to them. Nobody who's pitching, the 28-year-old that just finished his residency after 10 years in medical school and all that kind of stuff. He's got no money now because he's spent it all on medical schooling. But this guy's going to be, one of the high net worths when he's 40 years old. Right. Let me talk to him now. And his life is too busy helping fix people in the hospital. Let me be what he is to his patients for his financial future. And I won't make a lot of money off of him right now. Yeah. But get into that relationship now with that cohort if you've got the patience. But that's easier said than done.
No, but you hit so many great points about that. From a career perspective, it's amazing, right? Very few careers have what financial advisory careers have, right? Like once you get to the point and you hit escape velocity, which generally happens around year 5, right? If you actually look at the statistics, like most new financial advisors quit before the end of year 4. But when you talk to financial advisors who are successful, it was year 5 when they really started to feel successful, right? Because it's a cumulative business, right? The first year you're learning and getting licensed and so forth, and then you're starting to learn how to pitch and bring on new clients. And you bring on a few. Many of them are small because you're taking anybody who can fog a mirror into your business, and a lot of them will be your peers. But over time, you get to year 5, it's like, hey, you know what? I've built a stable roster of clients here. Now I'm starting to make a really good living. And then as those clients grow, you grow. And as you mentioned, some of your peers who you went to college with or you're meeting through networking or whatever, they're starting to make like real money and accumulate real wealth. And so the new clients that come in year 5 to 10 or whatever, they start to bring in, instead of just bringing on $50,000 or whatever, like, oh, this client's got $300,000 to manage. Awesome. And then you start getting, so it grows pretty well. And then, it's
no business is easy. Any professional services, it does take time to build it. So I'm not surprised about the 4-year mark. I mean, but you can think about that of you're starting a dental practice. You just got out of dental school. I mean, what do you get? Your 7 cousins as your first customers over there? And eventually things take a while to build. But the dynamics of short-term versus long-term are universal. They're difficult challenges. Obviously, it would be great if you could always just get the mass affluent or high net worths out of the gate. And the way to do that successfully is, there's a lot of, I think you got to sort of build a personal brand is important. Like, what do you stand for? What are you good at? And, that comes to some segmentation in your mind about what maybe you're capable of as a financial advisor. You can't have the brand of, maybe your brand actually is I focus on attorneys that are, associates 5 years out of school. And the reason why you want to sort of segment and be a little bit more niche in that regard is because through those conversations, you're going to learn more about the legal profession and what those people are going through, so that when you talk to the next prospect, your brand might be, as I work with a lot of attorneys and I know their specific pain points.
Yeah.
And you can get testimonials and you get known for something in particular, rather than I'm just known as being the financial planner.
Right.
So geography is important, obviously, if you want to focus on people that you could see rather than just on Zoom. That's always been historical. Segments of, net worth, the higher the net worth, the more competitive it is. It's harder to kind of break into that.
Right.
And there's very few of them around. But when you get to mass affluent and downward, you can pick a focus area that might stick with, what is Kyle's brand as a financial advisor? He's empathetic. He puts out some content that speaks to me. Yeah. Over time you might evolve from that, but it starts with trying to segment your audience and whatever, and maybe you don't know what's going to work. So you try a couple of things, but once you start getting a couple of bites, you can lean into it. Not everybody's got this roadmap of how to be successful in any industry. Right. It just sometimes happens organically, but you have to be open to it, and you have to have an organic mindset, to your point, and probably never sit on your laurels just because you had a good year or two, and think about what it means for you, your own financial future and planning. If you're good at giving advice, you should be able to self-reflect. What ifs? What if I lose 10% of my book and I have an unexpected illness myself where I need, $200,000 surgery that never was contemplated because I blew out my knee doing something.
That's right. Well,
aren't you glad this is long form? I think. Did you say that before we started recording, or I don't know if you said it?
No, we started talking after we were talking about how amazing your hair is, and you were like, "This is your first podcast." We talked about this is long form. We get into this good stuff. This is why
Mike is making a note to himself. Well, long form is good, but that Kyle, he's just taking long form way to the nth degree.
No. I recorded a podcast with a client of a show that we produce. And he went for an hour and 40 minutes the other day. And I wasn't talking on that one, but I was, the producer on that show. And it was like, we're going real long on this one, which is fine. I don't mind. It's good stuff. Here's the thing about this. People who are interested, and this matters for them, they will listen to the whole thing, or they'll skim forward to chapters that are particularly relevant to the business or the pain point or the whatever they're trying to do right now. Wonderful things about podcasts, right? You can pause them and come back and continue to listen to it. There's this little thing where you can adjust the speed. Some people listen to it at 1.5 speed or whatever to speed it up.
I do that.
Some people are psychopaths with a 2.5, start sounding like Alvin and the Chipmunks for the old heads and the.
To be fair, just a little anecdote is, it does cap out at 2x speed, because I sometimes gone to the top to the 2x because I didn't want to miss anything, but I didn't want to hear it so slowly. If it went to 225, I might have tried it. I may fast forward,
while I'm walking. If I'm listening to a podcast, I'm like, all right, you're covering a segment that I don't really care about or whatever. I'll do the whole fast forward 2 minutes and then still talk about it. Okay, give me another 2 minutes, whatever, that type of deal. But no, I love it as a medium. It's beautiful. So we get to jump around. But anyways, going back to what you were just saying, talking about as a business owner, if you're as an advisor, as you're growing your business, when you hit that plateau, this is what you were just talking about. Sometimes unexpected stuff can happen. One client, most advisors probably fit into the 80-20 rule, right? 80% of the value is coming from 20% of their clients. If all of a sudden one of the clients in that 20% leaves, what does that do to your business? So you do need to consistently be thinking about bringing on new clients to backfill the potential loss of clients.
By the way, the downside of that, sometimes I speak out of both sides of my mouth. I mean everything that I say, but there's also you can bite off more than you can chew. It's difficult to service too broad an audience as well. So the idea that you're always just going to cultivate this larger book of business, because eventually they'll be your 80-20 in the future, but you still have to do your job.
That's right.
And it's very difficult to manage customers' money effectively if you take on too many clients. And this is actually a good segue back into VRGL or other vendors, is we're in the business of, if we can create efficiencies for you, maybe you can actually do a great job servicing a greater number of people in your book. That's right. I heard historically, maybe people feel like 75 clients is where it starts to become complicated. I'm sure people, maybe 75 is too much for ultra high net worths, but is there a way to do just as good a job for those 75? Can you do 125? Sure. Maybe not without tools like VRGL. I don't know how you can, even getting to a proposal stage can take you 2 days or 3 days. You need to have analysts do it for you. If we can help truncate that to a matter of minutes or hours, maybe I saved you 17 days out of your year. Does that unlock opportunity for you to manage more money or talk to more prospects? So the tools and the efficiency and the AI in a future state could be that financial advisors can go downstream. They can have larger books of business and help more people, which is a noble thing to do. Also diversify their book for themselves so that, it's not 80-20 anymore. Maybe the future rule shouldn't be the 80-20 rule. Maybe we can make it the 60-40 rule. We're moving that direction over time. And that is only going to happen through really technologies that make you more efficient in this new hybrid robo world that we're heading into.
I love it. It's funny. I'm glad you brought it back to the technology thing. And, earlier you were talking about how,
I have to plug Virgil. Every time you ask a question, I'm just say Virgil.
But you mentioned in our prep call, and you were actually just talking about this a few minutes ago, about how even for somebody like yourself, who is an industry veteran on the tech side, who was in venture capital focusing on the FinTech for wealth management segment, that you found it could be a bit overwhelming at time. It can be like, wow, what is, try to keep track is crazy. And you mentioned that, some advisors are maybe feeling a little FOMO-ish or anxiety induced because of, Jesus, so much change, so many things, like how much of this, what should I be implementing, all this type of stuff. And I tell you, I've been doing some pretty deep dive research on FinTech companies on the Kitsis FinTech map. I'm not sure if you've seen that version.
Yeah, there's 100 companies on there. Yes.
There's 500 plus companies on that, segmented into different areas and so forth. So doing it for, a project in terms of analyzing, podcast and YouTube adoption for all those companies by segment and so forth. So for somebody like me who spends his whole career focused on the space, it's overwhelming as well. So I can imagine as an advisor, they're like, okay, well, which ones do I implement? Virgil, obviously. But which ones are going to make are worth the investment for me? Because, every new technology takes time and focus to figure out how am I going to use this thing. And there's a misplaced belief that advisors aren't tech forward. Like they are, of course, like they use technology all day long in their business. Right. But how do you see that? As CEO of a tech company, serving the space, how are you helping advisors understand that this technology is one that will save them time, will take some of the anxiety, the burden, and so forth? Kind of we're going back to the psychology stuff we were talking about before. Like, how do you calm the nerves, if you will, and get them focused?
Yeah, it's a great question. I mean, I think that let me answer it broadly first. I don't think that there's an easy answer to how to help an advisor reduce some of the anxiety about how many vendors are out there and staying ahead of the curve. It's really just an enormous undertaking. I do foresee a lot of M&A in the space, and I don't think in 4 years there'll be 500 companies on that map that you were just talking about, because naturally some of these point providers should be together and offering a more holistic offering, and some are producing the same kind of value proposition. They can be combined, and maybe Virgil sits into that category too in the future. But how we stand out is to try to make it very intuitive and easy. And just like the elegance you have, I come back to Apple because they've done a great job with it. Once you see how easy it is to create a white label proposal through Virgil, there's some setup obviously at the top of the relationship to get your look and feel, what kind of information and data you want to see in your white label proposals. But we don't come in there and say, this is a great output for you, and show you 17 complicated steps of how you can implement it. Our job is to make it easier for you so that you don't have to focus too much. You're just delighted, like, wow, you guys can do this for me? Yes, we can. Make it easy for them to become customers, make it easy for them to implement, and even more importantly, make it easy for them to generate proposals once they get the hang of it. And we'll walk through you the first couple of times how to do this effectively. So it's like any consumer business, with the financial advisors being our consumer, the ease of use creates better adoption of the tools. Right. I mean, how many things you're ambitious, you hear about a new gadget or a new feature, you get it home and you try to plug it in and then it doesn't, the cord doesn't work with this laptop, or there's, inconsistencies with even like when I was putting on the headphones for this, I'm like, I plugged it in and then I had trouble with the audio, but my microphone, it's like, who wants the brain damage? I couldn't back out of this call for it. But if this was like a nice to have, instead of like I'm getting on a podcast, I might have put these wires in the corner and then just like gave up on it. It's like, you got to make it, the easier you can make it for the consumer with any sort of technology to learn about it, sign up, engage, and then ongoing usage to be delightful and painless. That's how you stand out. Now, I can't solve for the fact if there's 20 other vendors that the advisor's talking to about 20 other things. How do they manage to consume all that? I don't have an answer to it. So if we do our job great, hopefully other vendors are doing their job great as well. Yeah.
That's great. I love it. Okay. Home stretch here. I thought that was really solid advice. I'm sure, in addition to working with the internal team and getting a feel for the culture and what makes a VRGL tick, you've also been talking to lots of advisors and wealth management executives as well, and kind of getting a feel for like what works for them, what do they need, where are the gaps in their businesses and so forth. That's the smart thing for the new CEO to be doing. So as you survey the landscape, and imagine that you have a magic wand or a blank check, what's the big problem you would love to solve, and have VRGL be the one who solves it, but it's maybe not feasible yet? So this is like an imaginary, like, hey, I see this problem here and we're going to like chart a course there. I don't know, I'm not asking you to give the secret sauce away, but you know what I'm getting at. Like, okay.
So that's a great question. I do have something in the works. It's the magic outperform create alpha button that we're working in our back office room. I don't want to discuss it. It's going to be brilliant. You just press the button and all of a sudden you can outperform the markets. But aside from that special sauce, I think we touched on a couple of things that I'd like to see that maybe we're not quite there yet. Is there a way to get through this period of what I'm going to call AI anxiety? I don't know if maybe we can coin that term, AI anxiety, which will probably last the next 2, 3, or 4 years, where we go from all the stuff is happening, hard to understand what to use. We know it's changing everything and powerful, but how do I as a consumer easily interact with it? I think 3, 4 years, once people become comfortable and it becomes more intuitive, we can kind of get to that back end where it becomes natural for an advisor to just interact using just voice commands, methods of extracting data information and engaging. That's not clunky. There's going to be a back end of this that it's so intuitive, just like, the idea of, you used to have to code everything, but now you can imbibe code. You can actually just tell the computer what functionality you want. And through AI, actually, you can build applications and features. So one magic wave the wand button is if we can jump forward 3 years in time and get past this barrage intake. I think it's like the last 18 months, sort of like this panic that's taking over the world. So magically get to that end state in 3 years. It'll be ongoing, but 3 years. The other, if I could wave a magic wand, is how to actually deliver good financial advice to the lower segments of AUM, which is what I'm talking about. That's a hard thing to solve for. But if we're articulating here how valuable having a financial planner is for high net worths and affluent net worths, the same statement is 100% or even more so true for people who don't have a lot of money.
Right.
So if I only have $30,000, why is it less important for me to get good financial advice than the guy with 13 million? And the reality is it's probably more important. So how does the mass population get good financial advice? And the way that can be solved for is tools and efficiency to the financial community. So maybe they can go downstream. I don't know if they can go that far downstream. And then coming up from the upstarts is the direct to consumer. Can they get tech forward only tools without human interaction that accomplishes 50 or 60% of it? They'll lose the human element, but it's better than nothing. Yeah. So that would be a magic wand. How does everybody in this country have access to guidance and financial planning, because we all could use it no matter where we are and no matter what our AUM is?
Love it. I love it. Well, those are some good ones. I love that. Fantastic. Well, Kyle Zasky, we can find
VRGL.
I was going to say VRGL, VRGL wealth.com, right? So the website is VRGLwealth.com, spelled VRGL. And we'll get that linked up in the show notes. We'll get your LinkedIn. You're active on LinkedIn. We'll get you linked up there on the show notes. Any other place that people should be looking to hang out and learn more from what you and the VRGL team are doing?
Yeah. So, I mean, look, I'm in a discovery mode myself about the rich and fertile industry, even though I've been paying attention to it. But just 6 weeks on the job at VRGL, I've already attended 2 conferences. There are a lot of conferences out there for financial advisors. It's easy to see a lot of people pitching you services, help you with your marketing and your branding and your top of funnel and technologies. I think, there's no shortcut here. You just have to explore what's out there, get to know your peer group. And I imagine wherever you're holding your shingle out, your firm probably has tools or educational resources available. You have to go through a discovery process. Just don't panic when you go through that process. Think about your daily life, what you want to accomplish, and what pain point you would love to have solved. And whatever you can conceive of, there's probably someone out there that wants to help you achieve that.
Yeah, I love it. Well, this has been fantastic. Thank you very much for coming on the show.
No, thank you for inviting me. This is great.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to my man, Kyle Zasky from VRGL Wealth for his first ever podcast recording session. You crushed it, Kyle. It was awesome. Great stuff. You are welcome to come back on the show anytime. As I mentioned at the top of the show, please do make sure you take a moment to like and subscribe to the podcast on your favorite podcast platform. And do me a favor. Be nice to each other. We'll see you next time on the Modern Financial Advisor Podcast. See ya. Bye.